We detected an unusual trade worth $500,000 on Pony AI stock, ticker symbol PONY. But here's what makes this even more interesting. Pony AI is scheduled to report earnings next week on November 18th. Now, the last time we analyzed this stock was back on this day, July 11th, but you might have missed it unless you were in our membership. So we got in at the right time along with our members and rode this big move up and started taking profits on this day, September 19th, when those unusual options expired. As you can see, the stock gained over 60% ever since our first trade entry. This was our video analysis from July 11th that we shared with members only, where we showed the data behind why we were going long bullish on Pony AI, because we detected these unusual options that expire September 19th. And after the stock went up, we locked in profits and updated our trade when those options expired. This was our video update on September 19th that we shared with gold level members, locking in 329% profit and showing how we managed our trade to gain even more profits if the stock went up higher, which it did because it reached a new 52-week high. So if you want to see an example of the kind of analysis and trade alerts you get inside our exclusive membership, we'll put a link to our previously private video up here. Now, our trade already closed out near the 52-week high, so let's analyze the latest data from unusual option activity to see how a wealthy investor is trading Pony AI now, especially since earnings is coming up. Are they bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to move lower? Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on November 7th at around 11 a.m. in these November 21 options at the 15 strike calls. A quantity of 1,524 contracts and 500 contracts were being traded at a price of 68 per contract. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts costs $68. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so, how many contracts did they trade? Because it's not just these contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve our accuracy, increasing our probability of profit. So let's take a closer look at the data on the options chain in these November 21 options at the 15 strike calls. And we can see here that the volume spiked over 11,000 contracts, while open interest was at 3,000 open contracts. That clearly indicates new positions being opened since the number of previously open contracts was much lower. So this tells us that this wealthy investor was opening new contracts with positions in these options, because you simply cannot close out 11,000 contracts if 11,000 were not previously opened. At most, 3,049 open contracts could have been closed because that's how many existed at the time. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong conclusions, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this was a new trade opened by a wealthy investor, not a closing trade. Now, keep in mind, some of these new contracts could be other traders jumping in, including ourselves and our members, but the majority of these new contracts were opened by this wealthy investor we've been tracking. And with this kind of size, they're making a strong directional bet and putting real money on the line. How much? Well, let's do a quick calculation. Since the current volume is 11,535 contracts and 3,049 contracts were already opened, we can subtract that amount to estimate at least 8,486 new contracts that could have been opened. Next, we estimate the cost of this unusual trade by multiplying this number of new contracts by $68, the same price as we saw on the options time and sales tape. And this equals a total trade size of $577,000 for this unusual option activity. But keep in mind, earnings is coming up very soon, and so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll link it up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, then just head over to our website, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade carries higher risk, we still took it because this was still an unusual trade being opened before earnings, but we use position sizing to manage our risk. As you can see here at the 15 strike calls, since this was a new opening trade, we also bought these call options and entered the same position here, marked as POS, with the green color indicating a buy position. Because based on our deep research across multiple variables and data sets, this wealthy investor bought these 15 strike calls for about $68 each, the same price as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Pony AI stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $15, the stock needs to trade above $15.68 per share for this trade to be profitable at expiration. But remember, even if the stock does not break above this price, we already locked in a lot of profits from our earlier trade on Pony AI when those unusual options expired on September 19th. So if you want a sneak peek at that winning trade analysis that we previously shared with our members, we'll link the video here. For deeper access to our strategies, visit our website. We'll link it here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.